Are you fed up seeing your hard-earned money going to the government and ready to keep more of your money in your pocket? In this video, I am going to teach you literally how to pay zero taxes with an LLC. Before we jump in, don't forget to like, comment, and subscribe so you don't miss out on any changing business information. And if you stay to the end, I will literally give you my secret weapon on what you can use if you ever get yourself into a slinky with the IRS. Now, let's just get after it. As an LLC owner, you're able to reduce your taxes because you're able to literally change your filing status. What does that mean? When you are an LLC owner, you are typically going to be filing as a single member LLC or as a multi-member LLC. Or you can change your filing status to file as an S corporation. And when you file as an S corporation, that is going to help you reduce your self-employment tax. You could also file as a C corporation and change your status to be a C corp. When you change your status to be a C corp, you can minimize your taxes because C corps only pay 21% in income tax. So that could be a big drop in the event that your individual tax rate is higher. Retirement planning. When you are in an LLC, you can do so much around retirement planning. You might be thinking to yourself, Carla, we're not even thinking about retirement yet. Trust me when I tell you that retirement would creep up on you sooner than you think. But one of the things that you absolutely want to do is you literally want to start setting aside funds in your retirement account. Why do I say that? Because when you are self-employed through an LLC, all of your net profit is subject to self-employment tax. You have earned income. And when you have earned income, you're able to defer some of that income either through a self-directed IRA, a SEP, a self-employment IRA, a traditional IRA, a Roth IRA. There are so many options that you can use, but here's the thing. It's better that you put your money to the side for you than you allow IRS to keep your funds. As an LLC owner, you can deduct also your health insurance premiums. When you are self-employed, you need to make sure that you are able to get yourself some type of health insurance. When we worked for an employer, the employer would get us the health insurance. But now as a self-employed individual, we want to make sure that our health insurance premiums can be tax deductible. This includes both our medical insurance and our dental insurance. And the way that we're going to do that is we're going to go out and we're going to get us a self-employed health insurance plan, and then we're going to be able to deduct those premiums against our income from our business. Typically, your health insurance premiums are not even going to be deductible unless your actual medical expenses exceed 7.5% of your adjusted gross income. This way, when you're using your LLC and you're going to put those health insurance premiums through your LLC, a self-employed health insurance, you're going to be able to get a deduction regardless of the amount. So make certain that you're looking at that as well. As an LLC owner, you really can maximize your write-offs. You want to take every single write-off that is ordinary and necessary for you to do business. I want to explain what I mean by ordinary and necessary. Ordinary expenses are those everyday expenses that business owners typically have. For example, office expense, for example, maybe your cell phone bill. Those are ordinary expenses. But from time to time, you are such a unique business owner that you're going to also have necessary expenses based on what it is that you do to generate revenue for your business. An example of a necessary expense may be that you have social media. You may have a PR company, and that company may be parlaying you further, which is going to mean more people are going to come to your business. That's necessary for your particular business and may not be considered an ordinary expense for somebody else. But the key is you, the business owner, have to decide what's ordinary and necessary for you to do business. And the other thing that you're going to be able to benefit from as an LLC owner is the qualified business income deduction, QBI. Because an LLC is a flow-through entity, that flow-through entity, we get a deduction of 20% of the net profit. So that is a win-win scenario for you. You want to make sure that you maximize your deductions when you are dealing with your LLC. Offset other income on your return. I love this piece. When you are operating as an LLC and you are a flow-through entity, let's say that you're in your startup phase of your business. And when you're first starting a business, you could be incurring a lot of costs. You have to get equipment. You have to get your marketing together, your website together. Even forming that business is generating a lot of costs in the beginning. And you may also be working a W-2 job or have some other form of income on your tax return. Therefore, if you have losses flowing from your LLC, those losses can offset the other income on your return. Allow me to give an example. Let's say you are a W-2 employee, you're working for Amazon, you get your W-2, and maybe your W-2 shows you're making $50,000 per year. You started your LLC, you started it off as a side hustle. Your LLC for that first year of operation with all of your expenses, maybe you have a $5,000 loss. You're going to allow that $5,000 loss to flow through on your return to offset that $50,000 worth of income so that your net taxable income drops down to $45,000. The $50,000 from the W-2, the $5,000 loss, they come together and they drop your income. Never ever forget that when you are a business owner, the law says you have to be in pursuit of income. The law doesn't say that you have to make income. So make sure that you track all of your expenses and you get all of them written off. So you now know, as an LLC owner, some things you can do to reduce your tax bill. The number one thing that you can do is change the filing status. You can go from a flow-through LLC to an S Corp or a C Corp. The second thing that you want to do is do your retirement planning. It's never too early to set aside some dollars for retirement. And remember, those dollars are going to be tax deductible. The third thing you want to make sure you get deducted is your medical insurance and your dental insurance. You're going to deduct that as a self-employed business owner. And then our fourth thing is making sure that we have LLC losses, that we get those losses deducted, and we use those losses to offset our other income. Now, I told you that if you stay to the end, that I would give you my secret strategy that you can utilize whenever you find yourself in a slinky with the IRS. The one thing that you want to be able to do is be able to understand code section, and write this down, code section 162A. That is the code section that allows you to write off all of your ordinary and necessary business expenses. If ever you're in an audit and IRS says that this is not tax deductible, you pull out that code section and you read it to the auditor and you tell the auditor that it says right here, I am able to take all of my ordinary and necessary expenses, and I've decided that these are necessary for me to do business. It's a very powerful tool when you actually know the law. And here's the thing. When you know better, you absolutely have to do better. That is why I want you to like, comment, and subscribe so I can keep you updated on all things tax.